everyone. Today on Market Makers, we have Siddharth Srivastava. Siddharth is a fund manager at Mirae Asset, and he's an expert in passive products, or which are also called as ETFs or exchange traded funds. We'll be talking about what's happening in the electric vehicle or the EV sector, as well as we'll be discussing about Mirae Asset's NFO on Nifty EV and New Age Automotive Index Fund. Welcome, Siddharth.
Thank you so much, Milan, for having me here on the show.
Thank you. So we'll start with basic questions. So Siddharth, could you tell us what is the main objective and the vision behind this Nifty EV and New Age Automotive Index Fund?
So, Milan, basically, we see electric vehicle and other new age automotive technologies a big disruptive force in automobile space. We have seen such trends uh, evolving and becoming a huge and picking up a huge momentum in global markets like Europe, China, etc. And we see the same thing happening in India. We see that India is at a cusp, uh, at a place where the electrification will be the significant driver in automotive space for next 5-10 years or so. And we think that this is the right time to invest in this theme, because thematic investing is all about identifying a macro trend and investing in its initial phase, right? Rather than when the trend is maturing. So we are bullish on electric vehicles, hybrid vehicles, and all these new technologies which are emerging, and we are bullish for the entire value chain. So this is not just about the car manufacturer, but it is also about the raw material provider, about the battery manufacturers, about the tech provider, etc. So we are obviously, as I mentioned, pretty bullish. We see this theme evolving and capturing more and more market share in India.
Interesting. And compared to other automotive sector focused funds, how does this Nifty EV and New Age Automotive Index Fund differentiate itself?
So typically, when we talk about auto-centric products, their main focus will be only on car manufacturers or automobile manufacturers and auto ancillaries, right? Whereas when we are talking about EV, Milan, you should know that in an electric car, 35 to 50% of cost is battery itself. So if EV is to grow, the entire value chain has to grow, right? In fact, I will not be wrong if I say that more than a car manufacturer, battery manufacturer is important, right? We saw that 2 years back how semiconductor shortage completely paralyzed the automotive industries, and new car launches were stopped, car manufacturing slowed down. So here in this fund, we'll focus on the entire value chain. The companies from chemical industries, companies which are already sorts of having capex or investments in battery manufacturing, companies which are there in the tech segment, which are developing car connectivity, ADAS technologies or autonomous technologies, companies which are sorts of going to create chemicals for batteries, etc., along with automobile manufacturers and auto ancillaries, will form part of the fund. In fact, the representation of automobile manufacturer in this fund will be capped at 40% every quarter, because from a value chain point of view, that is what we see, that as I mentioned, that battery manufacturer is around significant quantum, so is the tech companies, so is the auto ancillaries, and that is why I think this fund is more sorts of diversified in terms of capturing companies from other sectors also.
Got it. And as you spoke about the entire value chain of electric vehicles, could you specify, apart from automobile manufacturers and battery makers, which other type of companies are included?
Yeah, so I'll give you a very sorts of broad number. So suppose battery, as I said, 35 to 50% is battery cost. 4 to 9% or 10% is around chassis cost. 8 to 20% is around drivetrain. Around 8 to 20% is your vehicle body. Equipments is around 10 to 30%. So, and then obviously there are, as you might know, a lot of tech companies also which are providing those car connectivity software. We are talking about L1 automation and L2 automation already forming parts of high-end sedans and SUVs, right? Already in India, and we see that evolving also. So when we are talking about EV, yes, we focus on names like Tesla, names like BYD, etc., but also companies like Cattle, which are into battery manufacturing, and others are equally important, right? Because if X number of cars need to be manufactured, X number of batteries needs to be supplied, and X amount of lithium needs to be mined, and X amount of chemicals needs to be produced. So that is why, as I mentioned, that this entire ecosystem is important. In fact, Milan, globally, we have ETF on electric vehicles, but we have a specific ETF on lithium and battery tech. So that is how sorts of evolved, and important these subset of these new automotive segments are. Just look at how much effort global tech companies are putting in to develop automotive vehicles, right? You have companies like Google, Apple, though obviously shelved its plan, but you have companies like Google, you have companies like Baidu, etc., putting in significant hours just to develop the autonomous technology. So EV is just a start. We have hybrids also in India significantly. But I think all these new technologies, we might have hydrogen fuel cell based products in future. We might have more autonomous vehicles in future. It is already there in China, right? We might see a wider adoption. So it is important to consider all these parts and focus on them, because ultimately what we want to bring out is a true to label thematic product, right? Idea is not to outperform the theme. Idea is to first provide a thematic exposure, and that is what we intend to do by having a coverage of companies across the value chain.
Okay, and probably that is the reason it is not just an EV fund, but EV and new age automotive index fund.
Absolutely.
Okay, and could you tell us is there any selection criteria for selecting these companies, and how do you ensure diversification? Because most mutual fund investors prefer some amount of diversification in the investments.
Absolutely. So see, the first of all, we have to realize, and we manage a global EV product also at our end, and globally, this theme has evolved more. You have a lot of pure play players also. You have a lot of players who have significant revenues coming from this ecosystem. In India, it is at a very nascent stage. It's a plus point also for investment. Like I mentioned, that for theme, you need to invest early to see the entire growth story. It's a challenging point also because you need to pick out companies without having a very significant portion coming from EVs and other new age automotive segments. So that is why the method is designed in a manner that it assesses company based on current products and services, whether they have current products in this space, or whether they have already incurred capex in order to set up a capacity to come out with products and services in this space, right? Because that is also important. So and also the focus needs to be there on government initiative. That PLI, we all know how important that is for manufacturing to grow in India. Also the FAME FAME policies, etc. So focus is on there also. So the way NSE is going to pick up stocks is in a group manner. Group A is basically it will capture all the auto manufacturers who have current products. If you have a product in EV, hybrid, new age automotive, then those companies will be captured out of Nifty 500. Okay. Then comes Group B. Group B is all about battery manufacturing. So all the companies who have battery manufacturing capabilities or who are setting up battery manufacturing capabilities are considered, and all of the companies are selected. So from Group A and Group B, all the companies are selected, and then the focus is on remaining sorts of sub items like top five auto ancillaries will be selected, top five raw material providers will be selected, top five IT companies will be selected, and if there's any company which is missed out and it is part of PLI or FAME, that top five companies will be selected, and all these top five selection is based on market capitalization. So there is bucketing done so that you have representation of all companies which are auto players, auto manufacturers, and battery manufacturers, and then top five companies each from raw material providers, auto ancillaries, tech providers, and companies which are in PLI and FAME based on market cap. One very interesting thing which Milan NSE does is that in order to ensure diversification, Group A, which is auto manufacturers, are capped at 40%. And within that, no company can have more than 8% weight. Okay. And the other group, the other remaining segments, the companies are capped at 4%. So no company can have more than 4% weight. The reason to do this is that there is representation of, for example, Reliance in this portfolio. Had the capping not being done, Reliance being a big company would have a substantial weight. But by including it, you are giving credit to Reliance for participating in PLI and possibly in future coming out with battery manufacturing, obviously, which they are setting up. But you are limiting the weight to 4% itself so that it doesn't overpower the portfolio itself. Also, by capping Group A at 40%, you are letting other segments also to contribute in the portfolio.
Got it. So this ensures, the fund is well diversified.
Correct.
Okay. And you spoke about, government policies like FAME and PLI. So how do you, what do you expect, the impact of these government initiatives on the index component companies, and will it lead to improvement in their performance?
Yeah. So see, let's go back a bit and see why government is focusing on EV. Because it is very important for EVs to grow in India. Now, oil import bill of India in FY24 was $132 billion, out of which 40% was from transport sector. Carbon emission, uh, transport sector is the fourth largest contributor, right? Government believe that EV ecosystem can contribute to almost 1 crore direct job and 5 crore direct plus indirect job by 2030. So EV, and also by building EV ecosystem, they are trying to be an important member in the EV value chain and reduce the imports also of EV components, which is happening right now. Just look at the batteries based on which current four-wheelers are running in India. EV four-wheelers are running in India. It's not Indian batteries, right? So there are multiple reasons. One is reduce oil dependency, reduce CO2 emission, more jobs, reduce import of uh, components which can be made in India. So it's import substitution, and then become an important part of the value chain by exporting, right? And that's again important. This EV is very important part of this PLI also. So government has a lot of reason to focus on EVs. and this new age automotive technologies. And that is why through FAME, they have provided 10,000 crore subsidy in PLI. There's a separate PLI for battery, there's a separate PLI for the auto industry, which totals to almost 44,000 crores in terms of incentive outlay. And they have already got investment commitment of around 1.2 lakh crores. In order to promote EV, they have already reduced the GST of EV cars to 5% versus 28% of internal combustion engine vehicles. They have already reduced GST on charging stations to 5%. In fact, they have reduced the import duty on EV cars for car manufacturer who will commit a minimum investment of around $500 million and set up a manufacturing plant in India. And the ambitious target is that from current 2% penetration of EV cars, and if you add hybrid, then that will be 11% roughly for four wheelers, to increase it to 30% by 2030. For commercial vehicles and two-wheeler, three-wheeler, it is much more higher. So government is, I think, going all out to promote EV adoption in India, and we are seeing that in policies, in commentaries, in actual actions being taken. And I think that's why, from a regulation point of view, from a government policy point of view, this is the key focus area of the government.
And given the ambitious target of increasing the penetrations of electric vehicles, as a fund house, what is your expectation of growth in automotive sector, especially within this EV segment?
It is a bit hard to put down a number, right? Because see, if I look at registrations of vehicles in India, you will be surprised to see. I'm just going by that number because there are a lot of numbers available. More than 50% of three wheelers, which are registered in 23, were already EVs. Around 2%, I'm not now talking about four wheelers, 2% were EVs, and around 8 to 9% were hybrids, so totally 11%. If I add two wheeler, three wheeler, four wheeler, their share increased to almost 8.5%. Now let's say 8.5%, but globally, when we see this share is much higher, and that share has grown in a very sorts of significant manner, right? We talk about S curve when we talk about any innovation, right? That there is an initial phase, then there is significant growth phase, the curve, and then there is a phase where the theme matures. For example, when it comes to four wheeler, China is already at 38% in terms of car share. Germany is already 24%. Scandinavian countries, Norway is at 93%. Sweden is at 60% or so. So it is hard to predict where we will see. I think government target of 30% for passenger vehicles is pretty much doable. I think if you read other reports, some ambitious reports are targeting almost 40% there. See, one thing, Milan, which you should also think of is that earlier EV adoptions were sorts of assisted by government subsidies, right? Government policies. But now battery costs have also started reducing significantly, right? And because of this, the payback period of electric vehicles have reduced, and the cost of electric vehicles have also reduced significantly. Just look at the cost at which EVs are now available in India versus few years back. So apart from government push, customer themselves is now getting inclined towards buying EV because of lower cost and much lower payback period for EVs itself. So I think in India, uh, if we are able to set up EV charging station, the supply chain right, because that's a critical part, right? One of the most, as I mentioned, that from a supply chain point of view, EVs can be manufactured, but are we going to manufacture enough batteries, right? So if we are able to set up the infra right, I don't see any challenge in attaining, let's say, a 30% market share by sales in four-wheeler space by EV and other new age automotive by 2030.
Interesting. So, just to summarize, on one side, there is a lot of government initiative to give a kickstart to the entire sector. Plus, in terms of current penetration and comparing it with, international examples, there is enough room for, EVs to growth for growth.
Absolutely. Absolutely.
Interesting discussion. Thank you, Siddharth, for taking out time and sharing these thoughts.
Thank you so much, Milan, for having me here and asking those questions. It's always a pleasure to discuss about such innovative themes and ideas. So happy to interact. I hope I was able to answer your questions properly.
Definitely. Thanks, Siddharth, and all the best for the NFO.
Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.